Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The political debate over a proposed wealth tax in California that could lead to a tech billionaire exodus from the state. We get the take of venture capitalist Ben Narasin on the potential 5% tax.
If you penalize one extreme, you're going to penalize the hardworking person that's sort of getting there.
Top tech picks for the new year from the dapper Dan Ives. We'll talk AI and his wardrobe.
That's our whole thesis going into 2026. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech.
Plus, the rest of today's news that got us squawking, silver swings, the fight inside Lululemon, and our favorite soap opera, the president's search for a new head of the Federal Reserve.
They better have good food. That's all.
At the Fed cafeteria?
Mar-a-Lago probably already has decent food.
It's Tuesday, December 30th, almost the end of this year. Squawk Pod begins right now.
Stand by, Joe. In 3, 2, 1, his mic is here.
Good morning and welcome to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernen. Along with Leslie Picker and Mike Santoli, Becky and Andrew are off today.
For the last week or two, we're watching metals again this morning, profit-taking and increased margin requirements from exchange-operator CME Group, contributing to a big fall yesterday. But a rebound is underway this morning. Silver dropped nearly 9%, its worst day since early 2021. Earlier, it hit a high around $83 an ounce. Gold was down 4.6%. Platinum and palladium dropped about 15% each. Copper down 4.7%. Platinum up about 3% right now. Copper is looking to notch its longest winning streak since 2017. There's some issues about supply chain shortages, supply and demand. Obviously, copper is a critical
There's some
component.
stockpiling. There is a little bit of a tariff component in terms of when you might, be able to move it across borders. And, I just think that there's so much hot money in metals right now. And it's kind of just, we're seeing the precious metals at the whip end of it. And, copper is always a little bit of a follower and more of an industrial. But also, there's been this reflation trade that's been in the equity markets as well and seems to be reflected to some degree in copper in the last couple of weeks. Meta, meantime, is buying AI agent developer Manus. The Wall Street Journal puts the purchase price at more than $2 billion. Manus was founded in China as a product of a Chinese startup, but later relocated to Singapore. It launched its first general AI agent earlier this year, which can perform complex tasks like market research, coding, and data analysis. It emerged as a notable AI player after claiming its chatbot offered better performance than OpenAI's deep research agent. The acquisition fits with Meta's broader strategy of buying specialized AI startups to acquire talent and fast-track its broader AI business. The firms say Manus will continue operating its subscription service without any disruption. You see not a whole lot of reaction in Meta shares, down fractionally, although it's been kind of in the penalty box in the AI story. People are a little bit less confident on the payback on its heavy investments.
Yeah, didn't Benchmark get some pushback with this one when it had its latest investment, its latest round of, I think they put in maybe $75 million there and then got some pushback about it being a Chinese company. And we've seen such a bifurcation between US AI and China AI. And this is an interest, I don't know if it's a signal of more to come or whether there can be more from here. Obviously, they moved their headquarters to Singapore, probably to try and combat some of those criticisms. But obviously, an interesting thing to note in the whole AI arms race between the two countries.
President Trump focusing again last evening on the future of the Federal Reserve. Mr. Trump said he would reveal his choice sometime next month. He also renewed a threat to fire current Fed Chair Jay Powell and sue him for what the president called gross incompetence related to the renovation of the Federal Reserve building in Washington.
They better have good food. That's all.
At the Fed cafeteria?
After this,
at Mar-a-Lago?
Mar-a-Lago probably already has decent food. I think he was, President exaggerates. Stephen Moore was saying that yesterday at times, but kept hammering on the most expensive building ever constructed at $4.2 billion. When he was confronting Jay Powell a couple of months ago and they were together walking around the building, I think he was talking about something that had already been spent, and Jay Powell was just sitting there going,
Yeah.
Trying to just, while he was talking, Jay Powell was going, no. But he got more, he's angry. Not sure why they just cut. Maybe because they've got.
You know, they've cut 175 basis points with no recession in sight over the course of 15 months. And but you know, I guess it's just you didn't seem to be responsive at times, and went a year or 9 months on pause. You know, so I guess that's it just doesn't sit right.
Well, also it's still unclear whether he'll stay on. Post May, whether he'll stay on
the board.
On the board.
Yeah. Not as chairman. Yeah. And he said yesterday, any normal person would resign. I think that's what Trump was saying. If we had no inflation, if it was anchored at 2, it wouldn't matter if there was a recession on the horizon.
No, that's right. Yeah, exactly.
You'd want cheap money for people to build.
Right, or you just get in a hurry to neutral, whatever you think that is, which is definitely lower than where we are.
And there may have been, we have had recession scares in the last year.
That's right.
Again and again and again.
And by the way, September of 2024, the first cut was a deep recession scare. If you look at every market-based indicator, it was a mini panic. Sure. And even in October of that year, Kevin Hassett said it was the right thing to do to cut.
Right. That's why there's that saying that the market predicted 9 out of the last 4 recessions.
Lululemon responding to its founder launching a proxy fight and nominating several independent directors to the company's board. Lulu founder Chip Wilson made his move 2 weeks after the company announced the exit of CEO Calvin McDonald without a successor. Wilson nominated 3 people to Lulu's board, including the former co-CEO of On Running and ESPN's former chief marketing officer. Shares of Lululemon have fallen more than 44% this year. In a press release, Lululemon said, quote, "In the interest of avoiding a costly and distracting proxy fight, the board requested from Mr. Wilson the names of his director nominees to evaluate their qualifications and backgrounds. But Mr. Wilson declined to engage further. Now that the names have been submitted, the board will evaluate Mr. Wilson's director nominees in due course." The company said it's encouraged by his strength it's seeing in the U.S. and internationally, but it said it recognizes there are more opportunities to really realize value across the company.
When you say Mr. Wilson, I guess it's from my childhood. Mr. Wilson!
Cheese will be next.
Coming up on Squawk Pod, California's tech elite are up in arms over a potential wealth tax. Ben Narasin, founder of Tenacity Venture Capital, joins us right after this break.
Everybody uses the example of the Bezoses of the world. But what about the dry cleaner that opened 1 store and then 2 and then 5 and then 10 and 100% of his or her net worth is in that asset?
Welcome back to Squawk Pod from CNBC. Today with Joe Kernen, Leslie Picker, and Mike Santoli.
California's tech elite are angry over a potential wealth tax in the Golden State. The heated debate played out largely on X, where some tech leaders have called out Silicon Valley Congressman Ro Khanna for supporting the idea. Y Combinator's Gary Tan has even called for a primary challenge for Ro Khanna. In a statement, Congressman Khanna's office said he has always supported a modest wealth tax on billionaires to deal with staggering inequality and to make sure people have health care, while also advocating for common sense workarounds. Joining us now, Ben Narasin, founder of Tenacity Venture Capital. This is just such a multifaceted discussion we can have. Ben, we've had Ro on many times. I don't think he always did support what he's now calling a moderate wealth tax. I think in the past, he's come down on the side of a lot of his constituents and not. And then I think about, does California need more money to waste? I mean, is that really the answer for how to deal with things out there?
It's pretty tough to be so, proven to be poor at your job of spending money that isn't yours and then to ask for more. California's own accounting group said that they found $9.6 billion worth of waste and inappropriately spent capital and fiscal malfeasance. And, we went from a surplus to a deficit, of course. But, this is just the same as always. This is political pandering to the proletariat. It's a let's tax the rich and help you, little guy and gal. it has no basis in anything that works. There's no country in the world where a wealth tax has worked, with one exception, and that's Switzerland, and they do it in an extremely logical and fair way. It would take you 20 years of paying Swiss wealth taxes just to equal what you would have paid on a gain in the United States through capital gains. So, this is a bunch of chest pounding. I really hope it doesn't pass. We had this conversation when Kamala was running. It's just an idiotic concept that is nothing more than political positioning. Having said that, Mandami won in the same way. So, I'm worried about that.
Ben, there's two issues here, I think, if you boil it all the way down. And one is if someone accrues a lot of wealth paying, and I've seen people say, I paid 53% to accrue all this wealth. Now I've got it. It's private property. There's no way that you can just say, now I want some of it. That's confiscatory. You've already paid taxes on it. Then there's founders' shares. The people that found a company, let's say it's at $1 and now it's at $1,000, and they borrow money against the gains to live off those. Then they die and their heirs get it, and it's never taxed, basically. And I almost can see, and Bill Ackman's got a way that you could maybe address that. I don't know how much money it would raise. It's not going to solve California's problems, And don't
forget the fact that there's well-documented cases where countries and states create wealth taxes, and you see massive fleeing of wealth.
You do. But
France in 1989 lost, by their own numbers, 10 to 12,000 millionaires when millionaires mattered. Back in the 80s.
But it goes against everything we learned about property rights and John Locke and everything else over the years, that it's basically confiscatory. And if you go down this slope, I don't know where it ends. But I do at least understand the notion that if you never sell anything and you're a founder and you're worth $20 billion and you just live off borrowed money like a billionaire, I can understand how the optics of that make it ripe for
this is the whole
trying to change something.
Buy, borrow, and die philosophy upsets a lot of people. It is a tiny fraction of the planet. To worry about something that impacts 1 or 2 bips of the population, and by the way, these are exactly the people that have the flexibility to go wherever they want. So, you've seen this when people change trust law, they move to another place. When people change corporate law, you've seen all the things Elon Musk's been doing about anti-Delaware. Now we've got to be in Texas. Money is fungible. People can move. When you're at that level of wealth, you have an enormous amount of flexibility. I mean, I've heard so many tales, and I've seen people that have become or coming into the billionaire class that have almost immediately moved to a tax-free state. I mean, you just saw, I don't think it's because he's a billionaire, but George Clooney's now moving to France. So, you're just making it really hard on people. And yes, it is confiscatory, because if you take out that tiny fraction, drawing attention to the 1 in a million to try to make a case for something that might impact even 1% is totally unfair. And, one of the things that goes on Twitter, a lot of people talking about, I don't understand property taxes. I'm paying rent for the house that I own. There's plenty of versions of a wealth tax already. Property tax is a great example. When I moved to California, I paid cash for my house because, having been an entrepreneur for 25 years, I worried that I might risk it all again. It is really, really hard to address the sort of unrealized capital gains. First of all, everybody uses the example of the Bezoses of the world. They're borrowing against their public stock, they're spending it, they'll eventually die, their heirs will get a step up. But what about the dry cleaner that opened 1 store and then 2 and then 5 and then 10, and 100% of his or her net worth is in that asset, and now it's worth $50 million? If you penalize one extreme, you're going to penalize the hardworking person that's sort of getting there. Switzerland has made it work because they take a small 10 basis point to 1% wealth tax every year, which is negotiated and generally relatively low. But keep in mind, they don't have capital gains, and their income tax is like 11.5%. So you can't stick it to us everywhere. I mean, you got to sort of pick your battles. Otherwise, it's just totally and completely unfair.
What do you think it means for entrepreneurship? Obviously, California and Silicon Valley, a lot of important companies were founded and still remain headquartered there. I get the point about billionaires leaving if this does come to pass. Does it disincentivize people from starting companies, building companies before they get to that billionaire status?
Sure. I mean, you're already seeing a material amount of companies and certainly investors that have moved to, for a little while, it's Florida, Austin, Texas. Anybody with big dreams and aspirations usually is pretty long-sighted in terms of what they want to achieve. And so this could definitely impact that. You also have a pretty material, I've already seen big dog VCs leave the state. And so that impacts it as well, because all of a sudden, if you have this diaspora of capital that goes out of Silicon Valley to all these little pockets, Austin, Miami, et cetera, then maybe it's just as easy for the entrepreneurs to raise there. You just don't really want to push your best and brightest out of the area. If you look at I think out of all the trillion-dollar companies on the planet, the only ones that aren't from Silicon Valley are Microsoft, Seattle, pretty darn close, tax-free, by the way, and Saudi Aramco and TSMC. But the vast majority came from here. 11% of the jobs in the United States come from venture-backed businesses. It's just really, really tough to sort of like basically kill the golden goose. You want to make some goose fillets this year, it's not going to help you very much for the next decade.
California's never been the lowest tax place to start a business, and yet you just cited those numbers.
Yeah, but a lot of people have already left. I mean, it's been a growing level of issue. I remember I was having a conversation over dinner. I used to live in Incline Village, Nevada, for a period of time. I moved from New York City. New York City used to be the highest tax in the country. So I moved from there to Nevada. And then I moved on to California. You know, a lot of great things here. I mean, we have some of the most beautiful terrain in the world. It's just a wonderful, wonderful place to live if you look at the physical environment of what we have here, the natural resources. But it is extremely expensive. You know, it's a horrific tax rate. And, you know, look, a lot of people are figuring out where they base their companies, whether it was a Delaware Corp or now it's maybe if you've got instead of a Delaware Corp, you've got a Texas Corp, Austin becomes more appealing. I've had founders that started from day zero in Austin. But there is a special serendipity here you're not going to get anywhere else. You're not going to lose everybody. But on the edge, what's more likely to happen is that companies will start here, but when they get to the level where if this were to pass, their line of sight to that billionaire status, they're going to move, and that's going to hurt us.
It's a one-time tax, right?
Well, when was the last time you saw a temporary tax in any government ever be temporary? I mean, if they do it once, they're going to do it again. It's not obviously passed, and hopefully it won't be, and all this will just be a classic tempest in a teapot. Waste of time, and people will be trying to drum up the votes they need, and they'll move on.
All right, Ben, we're going to continue to talk about it and watch it play out there. I don't think Newsom's not even for it, is he, at this point? Or?
Well, it would be a little, I mean, in the past, he has gone against these sort of offerings.
Yeah.
I mean, you know, let's remember he was backed by and is in office because of one of the wealthiest people in the country.
Right.
Getty, you know, is assumedly still a very close friend of his, and I think he's probably realistic enough about looking at those. Look, Gavin's got issues, but he's a relatively logical person, and this is not a logical thing to try and get done.
If you lose Gavin on this, I don't know. I'm not sure what that means. But they picked up Ro, who we were going to be on a ticket together. I'm going to have to tell him that that's not happening. The Rojo ticket, or Joe Ro. He wanted Joe Ro, but I don't want to be president. It's too, vice president looks good to me. Not a lot, right, Ben? Kind of. I
think you should go back to curing cancer. I thought that was pretty cool. I had no idea that was
back, right? Yeah, exactly. Anyway, good to have you on. Thanks, Ben.
Next on Squawk Pod, the big business and potential artificial intelligence opportunity of your post-holiday retail returns. Reporter Courtney Reagan joins us.
They're trying to personalize either the offer that you get or your window of return, your availability of return versus exchange.
And top tech stock picks for the new year from analyst Dan Ives, including the AI revolution he sees coming to Apple. Some of us have other concerns.
But if someone does have green, is that not an Apple when you're texting them?
We usually delete that from our text chain, right? I mean, when someone's a green. So that's always a red flag.
This is Squawk Pod.
Stand Joe by in 3, 2, 1. Cue Joe.
You're watching Squawk Box on CNBC. I'm Joe Kernen along with Leslie Picker and Mike Santoli.
If you didn't get exactly what you hoped for this holiday season, expect to wait in line for returns, which are again expected to peak for the year this week, according to Adobe. Sure, returns are annoying for consumers, but the rising cost of returns is a true pain point for retailers. Courtney Reagan joins us now with more. Hey, Court.
This is one of my favorite topics, reverse logistics. I know it sounds so sexy, right? But seriously, returns is really fascinating to me. That hot pink sweater, not really you, or maybe you don't really need more cheese knives from your in-laws, or maybe that's just me. But the NRF estimates almost 16% of total 2025 retail purchases will be returned. That's $850 billion worth, and it'll cost retail $75 billion. The cost to return an item can be anywhere between 20 and 65% of its original value. Why? Well, because a return triggers a decision tree of sorts. Software, and increasingly AI, determines the path to recoup the most value at the lowest cost, from restocking it in store, shipping it back to a fulfillment center, selling to a liquidator, or throwing it away. And as online shopping increases, so do returns. 22% of online purchased apparel is returned. That's almost 4 times the rate for in-store bought apparel. This at least according to an ICSC survey. Some estimates actually put that much higher. Because consumers are bracketing, or they're buying more than one size or color and rarely intending to keep more than one, but expecting free shipping each way. Blue Yonder manages supply chain and returns for 23 of the nation's top 25 retailers. CEO Duncan Angrove says few retailers have one person that owns returns, but those that do see a significant, return.
You're talking about double-digit improvements in gross margin. You're talking about improvements in sales. Like I said, I mean, if you're in apparel and 1/3 of your inventory is being returned, that's basically your largest supplier that you're not managing. You've got inventory coming back in, a lot of it, which, almost 1/3 of it doesn't go back on sale. It goes into a landfill.
Higher returns hurt margins, so retail return policies are getting tighter, even personalized. Returns management firm Loop says the number of brands charging for returns is up 6% year over year. That's the 4th straight year of increases. Some brands are shortening return windows, or maybe saying you actually can't get a refund, you actually have to do an exchange. AI is helping making those personalized person to person in some cases.
Yeah, that 22% number is really eye-popping. I mean, I'm a culprit of this. I return things all the time. But if it does charge me for it, oftentimes I'll be like, well, I guess I can kind of make this sweater work, or the cheese knives, which, by the way, I'm happy to take off your hands if you need anything to make eating cheese easier. But do you expect to see retailers building that into the price of items? With a number that high, I wonder if it gets to the point where retailers start increasing the prices of the items that they sell online just to kind of compensate for the hit they expect to take to their margins in the future.
I absolutely think they have to. If you think about it, we are now conditioned as consumers to want free shipping, but then if we return it, we want that to be free. So imagine the loss. Even if you take one sweater, right? A retailer shipped to pay it to you, you try it on, you don't like it, now you're shipping it back. They have a loss on that one item, right? Flat out. I mean, how long can they really expect to do that? And so it's a delicate balance, because they also want you, the consumer, to be able to feel like that you have the option to try it on, and if it doesn't work, to send it back. And that's why I think AI and these different software companies are trying to personalize return policies by person if they deem you're someone that maybe abuses things.
That was going to be my question.
Exactly.
Is your pattern of return frequency taken into account?
Exactly. It very much is by a lot of these retailers and these companies.
Or whether you got a really deep discount maybe on the sale and,
Exactly. And so there's all different ways that they're trying to personalize either the offer that you get or your window of return, your availability of return versus exchange. It is a very, very interesting situation. I don't know if I returned something recently to a store and they did ask for my ID, and actually they said, they brought up a previous return that I had returned something that was a big price item, basically, that I didn't have a gift receipt for. And so because of that, they weren't going to let me do it again.
Yeah, I wonder too if AI will ultimately be used in a way that it makes people more satisfied with their online purchases. That
Exactly
the AI
the
technology evolves to the point where it can say, like, this size sweater will fit you. Don't worry about it. And then people will be more inclined to keep it.
That's such a smart thought. And that is exactly what retailers are hoping, that it can be another use case for AI. better reviews, that are not obviously prepaid for, where people talk about the fit. I don't know if you've noticed on Amazon, but they are in some cases starting to flag this is a commonly returned item. And I've seen that a couple times, which has given me pause, thinking, well, I wonder why. Maybe I should look at a different option, which obviously then could be a loss of a sale. But maybe it's worth it if they end up sending it back anyways, and the retailer, if it's Amazon or a third party, pays for shipping both ways.
Yeah, I've seen the same thing, and I've said, okay, well, I'm going to find a different brand or a different look for whatever it is that I'm purchasing.
I love reverse logistics. It's so fascinating to me.
How many sets of cheese cutting knives?
I mean, I like cheese. It's a thing. People know me, and so I get
How many
a lot
sets
of
do you have?
cheese boards and cheese knives. I like 4 or 5.
There's a joke in there. There's a joke in there, but I'm not going to do it.
Okay.
I'm not going to leave it where we stand right now. I can't. You can imagine.
Way to go, Joe.
Yeah. Santa Claus definitely. Someone said Santa Claus doesn't exist, and neither does the rally. Santa Claus definitely exists. Maybe I can't speak for the rally every year. But we're wondering how many days we got.
Well, it's like 3 more days.
3 more.
Or 4, I guess, including today. It's flat, literally, from the time it started, the S&P.
All right, we'll see.
Yeah.
Hope brings eternal. Right?
It's lost a little bit of the hold on.
We talked about that yesterday, yeah. So you don't care.
People seem to anticipate these things way more than they used to.
If an AFC, you don't care.
Nope.
You're not going to base your Super Bowl bet on anything.
Well, on something, maybe football.
Mike believes in Santa, but not the Santa
Yes,
Claus
there you
rally.
go.
Exactly.
At least not this year.
Let's talk some tech picks for the new year, some potential AI plays. Joining us now, Dan Ives, Wedbush Securities Global Head of Technology Research, got kind of a Magnum PI shirt on. We were, the jacket's muted. You went with the shirt today for this appearance. All right.
Sure.
We can do that. Dan, since it's the beginning, we're at the very end of a year, so we always want to, think that suddenly the calendar has anything to do with it. But we are interested in 2026. So you've got some tech stocks that you like, and then it's notable that some are missing from the ones that you like. So I'm just wondering, does that mean that you're negative on the ones that don't make the list, or that you just like the ones that make the list better and they're all going to go up?
Yeah, it's a great question. I mean, look, NVIDIA, that continues to be one of our top names overall going into 2026. But I mean, the reason the 5 that we picked, Tesla, Microsoft, Palantir, you look at CrowdStrike, and, and even Apple, it's about the derivatives of the AI revolution playing out. I mean, that's our whole thesis going in 2026. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of the tech. And that's why I think those are the names. Those 5 are the ones specifically going into early part of 26 that I think are going to boom. I mean, that's why we pound the table on those 5 names.
Exactly. So that you kind of summed it up right at the beginning. You said, look, NVIDIA is one of your favorite names, but it's not one of the 5 that you mentioned. That doesn't mean that NVIDIA is not going to do well. You said them quickly. So Microsoft, what's the story on Microsoft? Azure?
I mean, look, when you look at enterprise, as you see the movements in the cloud and AI, Redmond, they're really owning that race. I think this is a stock $100 upside. That's why Microsoft sticks out on Azure and AI demand front and center.
Great. Apple, you mentioned quickly, but Apple it doesn't even matter if they're any good at some of these new things. They're just so good at what they do with everything else.
Yeah, and Joe, I think the whole thing for Apple is like, look, they've been on a treadmill 2.5 speed, right? They've been nowhere in AI. But now as we go into 26, we expect a major Google partnership in terms of the spring. Now the consumer AI revolution goes through Cupertino. And I think that is significant. We talk about $75 incremental. The stock is the AI multiple. That starts to increase for Apple. That's why I view that as just a glaring name that sticks out.
If I text someone and it's green, it's like, what's wrong with you? I don't know how other people compete with Apple. The ecosystem is so powerful. At least I'm a simpleton with this kind of stuff, and I just can't imagine trying. You got anyone not have an Apple and not have an iPhone?
2.
No one. Who has? if you have an iPhone, is it always blue with your text? I'm like a neophyte. Is that the way it works?
I thought there was some.
There's some
to that,
messages it could be. But if someone, sound like an idiot, but if someone does have green, is that not an Apple when you're texting them? Is that, really?
Well, no, but usually that's why we usually delete them from our text chain, right? I mean, when someone's agreeing. So that's always a red flag.
Right. I know. It's just, I do so many things. And believe me, I'm a novice at all this stuff, but Apple's just got a lock. How about Tesla? Why is that trading? What's a multiple now? It's about robots?
Well, look, I think the whole story is the autonomous chapters now coming to Tesla. And I think this is going to be the most important year in its history for Musk and Tesla because of autonomous and robotics. And I think we think autonomous is worth $1 trillion alone to the Tesla story, now Musk, wartime CEO. And it speaks to our view, look, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. And I think Tesla front and center in terms of physical AI. That's why we love that name.
Palantir's been in the news lately because some people think it's a short. Famous people, but it's on your list.
Look, I mean, we loved it since it was a young teenager, right? I mean, $10, $12. Because, look, this is what the haters are going to hate on Palantir. But you're talking about a company, Carp, that's changing the whole tech space. No one has what they have in terms of when it comes to use cases in AIP. I think that's $1 trillion market cap next 2 to 3 years. That's why Palantir, valuation expensive, but I think just starting to actually transform tech.
Dan, if autonomous is worth $1 trillion inside Tesla, why isn't Waymo worth more than that inside of Google? And why isn't Google a better consumer AI play?
Yeah, it's a great question. I mean, to me, Waymo just $100,000 plus cars. You have really on two hands the amount of cities they're in. I just don't think Waymo's could scale at those price points.
How many hands do you need for the cities that Tesla's in right now? At full self-driving?
Today, but I believe in 26 there'll be 30 cities and then ultimately scale from there. Look, Waymo, we talk about Google, but one of the reasons Google's in the Ives AI 30 is I think Waymo does give a huge value to them. But I think 80% of the market is going to be owned by Tesla over the coming years. And I think this really starts it's really the autonomous chapters, the AI revolution comes to Tesla.
Mm-hmm. And then you mentioned CrowdStrike. Maybe you already talked about that. I think Santoli wants Broadcom on this list or something, don't you?
Well, no, I just think Broadcom, by market cap and by the underlying business dynamics, kind of belongs with the other Mag 7s.
What do you think?
Yeah, look, I mean, it's a great point, and Broadcom is so well positioned. The reason I picked CrowdStrike is just cybersecurity. What Kurtz and CrowdStrike are doing, I mean, you look at all these use cases as they move to the cloud, you're going to need cybersecurity as a core component of AI. And I think where CrowdStrike's position, I think the stock has a 6 in front of it as we go into end of 26, potentially a 7. That's why this is one that just clearly sticks out in terms of CrowdStrike.
Yeah. So was it a conscious decision to be a fashion guy? I mean, it has definitely raised your profile, even as more people know who you are. Reminds me of Payne Stewart. I always wondered about Payne, the late great.
Payne was the best.
He was the best, but he, best. And you know what? If he wasn't great, you don't want to be dressed like that. You don't want to be walking around on a golf course. Like if he sucked, that would be he couldn't do it. So I figured the same with you. You couldn't do this if you weren't good at what you do. But now you're like, what takes more of your time? The clothing business or the tech stocks?
Oh, the clothing business is small. That's just fun in terms of the clothing line. But look, this is all something that came, it was never intentional, right? It's just always the way I dress, just funky. People liked it, and then it's kind of taken on something of its own. But again, if you're wrong in your stock picks, no one cares about the fashion.
Exactly. I mean, Kevin O'Leary might win a freaking Oscar. So, I mean, people can do different things. You know, we don't have to, what do you got? What do? You got anything?
I try to stay out of the way. Dullness is my brand.
I know. Keep your head down and your feet moving. Dan,
just try to drain the drama out of it all.
Yeah. you do. Yeah. Very well. I won't ask. You got kids.
I got kids.
If you got kids, it's like I got 3 dogs. 4 sometimes.
Yeah.
All right. See you later. Thank you, Dan.
Thank you.
And that is Squawk Pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Another big thanks to Mike and Leslie for sitting in today. Please tune into our TV show weekday mornings on CNBC at 6 Eastern, or follow Squawk Pod wherever you get your podcasts, and listen to the best of Squawk Box anytime you want. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.